Feel the breeze where the dreams don't stop. Sailing high in the Metro hub spot. Where next Metro, where the stories flow. Casting light on the life we know. Talking homes, talking lives we build. Every episode leaves you thrilled. Kick back, relax, let your worries go. You're tuned in now to the Metro Show.
Welcome to this RE/MAX Metro Podcast Deep Dive.
Glad to be here.
So the Florida spring buying season is definitely underway.
It is. And we're starting to get that early market data, which is always interesting.
Absolutely. We've got the March numbers from Florida Realtors right here.
Right. Crucial stuff.
And today we want to really dig into what these statistics mean for, well, everyone involved. Buyers, sellers.
And the agents working hard out there.
Exactly. So we'll cover single-family home sales, closed and pending.
Condos and townhouses, too. Same metrics.
Yep. Plus inventory, how long homes are actually sitting on the market.
And those all-important median prices.
And we can't ignore the mortgage rate roller coaster, can we?
Definitely not. That's a huge piece of the puzzle right now.
Okay, let's jump into the single-family homes first. What did the March data show for closed sales?
Well, closed sales were down again compared to last year. It's the second month in a row.
Okay, down. But how much?
About 1.3% year over year. Now, that sounds negative, but...
But? There's a but.
Compared to February, it's actually, well, it's less of a drop. February was down over 7%.
Ah, okay, so still lower than last March, but the decline slowed down quite a bit.
Exactly. Suggests maybe some stabilization happening in that segment.
Interesting. Now, what about the leading indicator, the pending contracts for single family?
That's actually the positive news here. Pending contracts were up.
Up compared to last year.
Yeah, just over 0.5%. Not huge, but definitely a move in the other direction compared to closed sales.
Okay, so more people were signing contracts in March. What do we think caused that little bump?
The most likely culprit, mortgage rates.
Ah, right. They dipped a bit in March, didn't they?
They did. For most of the month, the average 30-year fixed was, around 6.75%.
Which felt better than January and February.
Absolutely. Those months saw rates north of 7%. So
Yeah.
that little dip, even if temporary, likely encouraged some buyers to jump in. Makes borrowing feel a bit more manageable.
So, logically, that increase in pending sales in March, that should translate to better closed sales numbers when we see the April data, right?
That's the hope. You'd expect that lag, yes. More contracts signed in March should mean more sales closing in April or May.
But there's always a catch, it seems.
Well, the catch is that those rates didn't stay down. They've climbed back up towards that 7% level more recently.
Right, so that March momentum, it might fizzle out.
It could be short-lived, yeah.
Yeah.
That window of slightly lower rates closed. So buyers looking now are facing higher costs again. We need to be cautious about expecting a huge surge in closed sales carrying through.
Okay, good point. Let's talk about how fast these single-family homes are selling. Time on market.
The median time on market for a single-family home sold in March was 47 days.
And how does that compare?
It's longer than a year ago. Back then, it was 40 days.
So things are taking about a week longer to sell. Is that cause for alarm for sellers?
Not necessarily alarm. If you look back further, like the mid to late 2010s, 47 days is pretty much in line with those levels.
Ah, so it's slower than the frenzy, but maybe returning to a more normal pace?
Kind of feels that way, yeah. It suggests the market is rebalancing, finding its footing, not super fast, but not grinding to a halt either.
Got it. And the big one, price. What happened with the median sale price for single-family homes in March?
The median price came in at $412,500.
Okay. And compared to last year?
That's actually down slightly,
Yeah,
about a 2% decrease year over year.
down 2%. So even with pending sales ticking up slightly in March, prices haven't quite followed yet.
Correct. Still seeing a bit of downward pressure compared to last year's prices. Important for both buyers and sellers to keep that in mind.
Okay. Let's switch gears now to condos and townhouses. You hinted earlier it might be a different picture there.
Yes, quite different. The demand seems noticeably weaker in the condo and townhouse category.
How so? What do the closed sales numbers tell us?
Closed sales for condos and townhouses were down almost 10% compared to last March.
Wow, nearly 10%. That's a much bigger drop than the 1.3% for single family.
Much bigger, yeah. It clearly points to softer demand in this part of the market.
And what about new pending sales? Are fewer buyers even starting the process for condos?
That's down too. New pending sales dropped by almost 11%.
Okay, so fewer deals closing and fewer new deals getting started.
Exactly. It shows the slowdown isn't just a backlog issue. Buyer activity is lower right now in this segment.
That definitely paints a different picture. How long are these condos and townhouses staying on the market then?
Considerably longer. The median time on market was 62 days in March.
62 days, wow. How does that compare to last year and even before that?
Well, last year was only 43 days, so that's a big jump, nearly 3 weeks longer.
And compared to the 2010s?
It's actually higher than the typical median time we saw in the latter half of the 2010s as well.
So the cooling effect seems much more pronounced for condos and townhouses.
It certainly appears that way, based on how long they're taking to sell. That's a key signal for sellers in that space.
And does the pricing reflect that softer demand and longer market time? What was the median price?
Yes, it does. The median price for condos and townhouses dropped 4.5% year over year.
Down 4.5%. To what price point?
To $315,000.
So a larger price drop than single-family homes, consistent with the weaker sales and longer selling times.
Precisely. It all ties together. Buyers might find more wiggle room on price here, while sellers really need to factor this in.
Okay, so we've looked at both property types. What's the big picture view on overall inventory and why it's rising?
The main reason inventory keeps climbing across the board is simply that homes are taking longer to sell.
Makes sense. If stuff isn't selling as fast, the for sale signs stay up longer and the number of available homes grows.
Exactly. Sales are happening, but the pace is slowed enough that inventory is accumulating.
And why is tracking that inventory level and the time on market so critical right now for everyone, buyers, sellers, agents?
Because those two factors, rising inventory and longer market times, are typically what lead to downward pressure on prices.
Okay. More supply, slower demand, prices tend to adjust downwards.
Right. So watching these trends closely in the coming months is crucial. If they continue to climb, we could see more significant price adjustments.
Which has different implications depending on which side of the transaction you're on.
Absolutely.
So let's break that down. For potential homebuyers listening, what's the key message from this March data?
Well, for buyers, particularly those looking at condos or townhouses, the data suggests there might be some opportunities opening up.
Meaning
the lower prices and longer time on market could give you more negotiation leverage, more choices, maybe less competition than a year ago.
And for single-family buyers?
The picture's a bit more mixed. That March bump in pending sales might bring more listings online soon, which is good.
The mortgage rates are back up.
Exactly. So affordability is still a major hurdle. You need to be really clear on your budget and the long-term costs. But longer market times overall might still offer some negotiation room, even for single family.
Okay, now for sellers, what should they be taking away from this?
The main thing for sellers is managing expectations. Your home might take longer to sell than it would have last year.
So patience is key.
Patience and realistic pricing, especially for condos and townhouses, where we're seeing that clear downward price pressure.
But for single-family sellers?
The news isn't all bad. That March increase in pending sales shows buyers are still active. But your pricing needs to be competitive, and your marketing sharp. Understanding the difference between the single-family and condo markets is vital.
And finally, for our fellow real estate agents advising clients, what's the crucial intel here?
For agents, staying absolutely current is paramount. The market is shifting, and it's behaving differently for houses versus condos.
So tailored advice is essential.
Totally. You can't use the same strategy for both right now, and you have to be able to explain how interest rate changes are impacting buyer power and activity.
And leveraging the available data.
Critically important. Florida Realtors has fantastic resources. The interactive SunStats tool for members gives that deep local dive.
Which is invaluable for specific client situations.
Invaluable. And even the statewide stats on the main website give that essential, broader context. Agents need to use these tools to give the best advice.
That really highlights the importance of having access to this kind of detailed, reliable data.
It really does. Florida Realtors does a great job providing metrics statewide and locally.
And listeners can access some of that info too, right?
Absolutely. Members have SunStats, but the statewide numbers are there for everyone on floridarealtors.org. Definitely worth checking out if you want to dig deeper than our conversation today.
Great. Okay, so let's try to quickly wrap up the key points from this March deep dive.
Sounds good.
We saw a bit of a mixed market, didn't we? Single-family homes showed a flicker of positive momentum with pending sales.
Likely thanks to that temporary rate dip, but closed sales were still down slightly year over year.
While the condo and townhouse market clearly showed weaker demand, sales down significantly.
And properties taking much longer to sell, with prices softening more noticeably.
And overarching everything, is rising inventory because homes are just sitting longer.
And the big wild card remains those fluctuating mortgage rates. Their impact is undeniable.
Definitely the factor to watch.
For sure.
Which brings us to a final thought for you, our listeners. Considering these trends, the differing market segments, the rising inventory, and especially the return to higher mortgage rates,
What strategies do you think will be most effective for navigating the Florida market in the months ahead, whether you're looking to buy, planning to sell, or advising clients? It's a dynamic situation. Thinking strategically will be key.